Okay, welcome back everyone to the YouTube channel. In today's video, we're going to talk about another powerful institutional reference point known as the breaker block. Now, before I go far into this lesson, I must have to give credit to the founder of ICT Concept, Inner Cycle Traders, Mark Hodgson. He is the founder of ICT Concept, and most of the things I'm teaching you originated from him. So you can find him on YouTube by simply Googling that. So yesterday we talked about mitigation block, and in today's video we're going to talk about a breaker block. Why am I doing this? I'm doing this because I wanted us to trade together. I wanted to give you the best way to trade in the futures market. And then if you have not yet joined the Telegram group I provided for providing signals, you can do well to find the link in the description. Make sure you join. We're going to be sharing signals together. I'm going to be updating you. We will trade together. You can also share your signals and then we can check it together. So from next week, we're going to be sharing these signals. So make sure you join the Telegram group. And then guys, if you have not watched the rest of the videos, you can simply come over to Smart Money Concept and watch the rest of the videos. That is the only way you can catch up with us. And then guys, the last thing to do is to make sure you hit the subscribe button. Let's take me to 20K guys. This is the only thing I'm asking from you. Make sure you hit the subscribe button, and then let's get back to the lesson. Now, we started speaking about a mitigation block yesterday and we have finished everything about that. You can watch the video. In today's video is about breaker block. You have to understand that there is a very slight difference between a mitigation block and a breaker block. Let me show you what the differences are. If you pick your drawing tool, okay, if you have a mitigation block, remember we said that a mitigation block is mostly a failure swing that comes like this, and we have a failure swing and we come back and retest that level, this level, and probably hit this level to come back again. So this is how a mitigation block is formed. But when it comes to a breaker block, this time around, we do not have a failure swing. Let me take away everything here. We do not have a failure swing. We have something known as the liquidity hunt. Let me show you. Let me show you what that means. Okay. If we take this line, this time around, we take it up to this level just to hunt for liquidity above this level. Remember, people that have sold from this level, they are placing their stop losses around this area. These levels, this level, this level, this level, this level. And then the institutions, their target is to get as much orders as they can get to take the market to the next direction. So all these stop losses are known as the buy stops. So they will have to come over here and take the stop losses and then head down to this level. Now, a mitigation block will fail to reach this last high and will just have a failure swing and come down. But a breaker block will have to reach up here for the buy stops above this level just to match up the order as much as they can get and then come down to this level and break market structure. Remember, I said this level was the last order block that was violated to the upside, and then this time around it has been broken. It is no longer an order block, it is a breaker block. Okay, it is a breaker block. We can see it coming back to test this level, and then we can pull our trigger around this level. This is where we have possible trade entry around this level, okay. So this is the concept behind a breaker block. So whenever you see this, you should know that you should be thinking of pulling your trigger around this area. So this is where the breaker block is. What used to be our bullish order block is now a breaker block. Okay, you can see it right here. Let me change the color. Probably we are going to see it clearly. Let me make it red so that you can see it properly. Okay, so this is it now. So just like we have a bullish mitigation block and a bearish mitigation block, we also have a bullish breaker block and a bearish breaker block. So these are the difference. It is in this form. Okay, so all this is the bearish breaker block. Okay, bearish breaker block, we call it BBB. Okay, so for the bullish breaker block this time around, we have something like this. Let me draw something to show you. We have something like this that came and then pushed back and, you know, had a breaker, okay, and have to pass through this level, come back to retest this level. Let me show you, and then have something like this. There is a break in market structure, that is shift in market structure around this level, and what used to be our bearish order block here, this place, has now turned to a bullish breaker block at this point, because it could not hold this level. It pushed up above this. So this is where we pull our trigger when we see it. So let's get to our chart and check this chart formation so that we can know exactly what we are talking about. Let me delete everything and let's head over to the chart so that I'm going to show you how to spot these guys. Okay, so let's see if we can see any of these breaker block and mitigation blocks. Okay, so we are going to check them now and see if I see any. I'm going to show you right here. So right here, I'm seeing something like a breaker block. This time around, a bearish breaker block. We have a swing to this side, come down, upside, reach out to the liquidity around this level. All the liquidity, okay, the buy stops, that is the buy stops around this level. We have picked all the buy stops and then it went through this level, violated market structure around here. Okay, and then this is the mitigation block. Let me show you this particular candle. Look at what happened. Price came and tested that level. Okay, price came to that level, straight to that level, this place. This is where we pull our trigger at this point, this level. Okay, this is where we pull our trigger. Now, this is a very powerful concept. The entire movement is seen as a bearish breaker block. Okay, remember the way we shaped it. So you can see this all around. Let me check if I can see another one that can be of good use for us. Let me show you this. Let me show you something very interesting that you can see. This, I can use this as a bearish breaker block. Look at what happened. And then we had this movement and then we came back and test that particular breaker block. The last candle that was traded to the downside, we tested the level and then we head down to this level. Okay, we are pushing down. We are pushing down. I'm looking at that entire move. To some people, they may not call it a breaker block, but to me, I feel all the buy stops are around this level to the body of the candle. To the body of this candle, all the tail, including this place. So I can expect buy stops around this area, all this area, because the people that are selling, this is where their stop losses are. That is the buy stops. And for the institutions to get enough order as possible, they have to come back and fetch it, come back, retest this level, and then push price to the next side of the liquidity. Okay, so we can see enough of this, a lot of this happening and happening and happening again. I wanted to call this a breaker block, but I don't want to call it a breaker block because let me see if we can see a breaker block here. Push upside, come back, push above that level. This is not a perfect breaker block. Okay, so let's see if we can find enough of this. Another last example, then we can take our bullish breaker block. Okay, this looks like a breaker block for me. Push up, came back, took out this level. Okay, came back and broke market structure around this level. Okay, and then came back to test that candle. Look at this candle, the last big candle that was traded. Well, let me mark it so that you can see this level. Okay, this entire level was tested and then price pushed down. So let's check for a bullish breaker block so that you can see also how that one works. This time around is at the downside of the chart. Let's reduce this and let's find enough of that, and let me give you an example of how that looks like. Okay, let's see if we can find any. Okay, I'm seeing something really interesting here. Okay, price pushed down to this level, came back, push up, tested this level. At this point, the last bullish candle is our breaker block. Okay, this level, and then price came back to touch it, even though it came to this level, just this level. Let me expand it so that you can see the power of that particular breaker block. Okay, this time around a bullish breaker block came down, took out liquidity below this level. That's the sell stops this time around, not a buy stops. So the people that are buying, their stop losses are around these areas that I'm putting these things. So price have to come and pay it and then take it up, came back and tested it. Let's see if we can find more and more of that. Guys, this is one of the very powerful concepts you can find out there. Make sure you pay attention to it and go to your chart and see if you can spot all this for yourself and learn more and more of it. Okay, so this looks like a bullish breaker block for me. Came, tested, came and push up again, came back to test this candle, okay, this particular bear candle around this level, and then price executed to this level. Okay, so this is actually how to spot these things, and then you can enter trades with just this information. So make sure you practice this, and then in the next class I'm going to show you how to spot fair value gap. At the end of the day, we'll compare all these things and use the confluences that these provide to have a perfect trade entry. So this is how to actually approach the market with the smart money concept. Thank you guys for watching. Remember to hit the subscribe button. Let's take this account to 20K as soon as possible. So guys, thank you for watching. See you in another video.